Hey everyone, how's it going? We just got the closing bell for Monday, June 24th. We were hoping that we might get a little activity this week, but so far it's been kind of quiet. But that's not too surprising. Most of the catalysts are later in the week, although we do have some potential for volatility tomorrow. So let's take a look at how the market moved today. So S&P, we can see that we pulled back a little bit below that EMA 8. So we were saying this morning how there is a high potential to hit that EMA 20. So it looks like so far we might be getting that in the S&P. And when we look at the QQQ, we actually made a lot of progress. We've made it almost halfway in between the EMA 20 and the EMA 8. So far, everything that we looked at this morning, it really does look like it's coming to fruition. So let's see, intraday, the S&P came and touched this purple level, came up to that purple level, came back to the VWAP, came back to this purple level, and then at the very last minute, we had a sell-off below, and that's what got us below that EMA 8, this red line right here. So once again, you can see that drawing these levels, we drew them well in advance. Not even today, right? We didn't even do it this morning. We did it many days ago. We put these lines in. So anyone who tells you that markets are unpredictable or completely random is just not true, because humans are not random. Humans are creatures of habit. So we tend to hit certain prices, and the algorithms that we program are based on human behavior as well. And so they do move in predictable fashion. As long as you know what to look for and you know how people behave in certain situations inside a given set of criteria, in this case, the market, then you can draw these levels and be pretty darn accurate as to how things are going to move. So S&P traded down, NASDAQ traded down even more. And you can see that, again, we hit these levels, that thin purple line, this thick red line to this purple level, the next purple level, reacting once again to this purple level. And then over here between the red line and the VWAP, and then at the very last minute, we broke down below that purple line. So definitely weaker in the QQQ. What we want to know is, how did the Dow Jones look in response or in relative to that QQQ? You can see that the Dow Jones was way up. We didn't draw levels on these. We probably should. But in any case, it did come off those highs, so it's not looking super strong. The QQQ ended on the lows. The SPY ended on the lows. The Dow Jones somewhere in the middle, well, actually almost halfway in between. So if we compare these now, QQQ pulling back beyond the EMA 8, looking very much like it's going to hit that EMA 20, and the Dow Jones moving higher and then meeting some resistance right here. Okay, so at the lows, so in this region, in this zone, if I put a volume profile here, you'll, okay, not a major spike, but there is a spike right here. See? So it's just touching these spikes, these spike areas right here. Obviously, the bulk of it is right here. We did get beyond it, but that is also going to be a gravitational, a magnetic pull for us. If whenever we hit these highs, whatever we top out over here, this is going to be a huge gravitational force to pull it back. So how high can this go? Can we make new highs? That would be way up here. Can we match these highs? Can we match these highs? We'll just have to see. So far, the Dow Jones is looking okay. Some chartists, I don't put a lot of emphasis or faith in chart patterns like cup and handle, and the only a few very basic ones like a double top, a triple top. Those are meaningful because you're hitting the same level. It's showing you that there's areas of support and resistance. There are traders who are habitually going in and trading that same level. That's a different story than a cup and handle. So, for example, some people might say if this had reached all the way up to here, that would be a cup and a handle. That's not that meaningful to me. To me, that would be a triple top and breakout. That makes sense. But to call that cup handle is not a really big deal. And then some people will call this, well, it looks like almost a head and shoulders, and that would come down. So once again, I don't have huge faith in patterns. Yes, they exist. Yes, the price patterns, you can look for them, and some of them may mean something sometimes. The problem with that is what I've taught you guys, if you've been in any of my courses, is that not everything works every time on every single symbol. If I have a system that works really well on the S&P 500 and has a 75 or 85% win rate with a profit factor of 2.5, well, it doesn't mean that it has the exact same win rate and the exact same profit factor on all 500 individual stocks in the S&P 500. And in fact, there's more than likely at least 100 or 200 of the stocks in the S&P 500 where that system doesn't work at all, where the win rate is less than 50% and the profit factor is less than 1. So we won't want to take something and just apply it across the board and say, hey, this works, I'm going to just apply it. If I saw a cup and handle, I would want to say, okay, which ticker? And then I would want to go and they say, okay, in the past 20 years, 80% of the cup and handles on this ticker were successful. Because I might find one, just like the system trades that I just told you about. What if on I don't know, Caterpillar, we go and we see a cup and handle or whatever pattern, and yes, that pattern in general sort of works on the S&P 500, but on this particular stock, it only works 40% of the time. Then that'd be a terrible application of that cup and handle, right? And so it's really hard to get those statistics on chart patterns because you have to visually look for, and you have to program in these visual criteria to say, identify the cup and handle. It's not like it's very hard to define in programming language. It's not like a human can just go and look at it and say, okay, that looks sort of like a cup and handle, and I'm going to consider a cup and handle. The computer needs very precise parameters on what is a cup and handle. It can't be this sort of thing, looks sort of like it can't be that. So it's really hard to get that type of data on a pattern, and that's why I don't rely on them. So in any case, if we get up to here, we will be looking at a potential triple top. Okay, triple tops, if they don't break out, then they will move downwards and they will break down. The only comfort we have is that we have this sort of the same situation as the equal weighted QQQ, where we've got this situation going on. Okay, so a flat top triangle, and more likely to break up than down. But if we fail on this one, then we're testing this. And then if we pass that test, then we're going up right here again. And if we fail now and then, we're going to pick a side. And generally the flat is the one that gets broken more often than not. So the Dow Jones is looking good for now in the short term, potentially in the medium term, if it can break above those highs. And then we'll have a situation where we're getting more like the QQQ coming down, the Dow Jones coming up, the S&P somewhere in the middle. And this S&P does not necessarily have to move down that far. It looks like it is going to hit that EMA 20 still. But if we get that situation where the Dow Jones becomes really strong and the QQQ weakens, then the S&P could conceivably just chop sideways and stay above that EMA 20. It doesn't have to pull back to the MA50. We could have QQQ pulling back to the MA50, but the S&P not following suit. If the Dow Jones gets dragged down with the QQQ, then we're looking at that pullback almost assuredly. And then we'll have weakness in the overall market that might break that MA50 and it might come down, and that would become a correction. So for now, we're still going to watch that QQQ very carefully. We're going to watch the SMH very carefully. SMH pulled back all the way to its EMA 20. So we want to watch tomorrow. Do we bounce? Do we break through? Do we just chop sideways? And same with XLK, I didn't look at. So same thing, we're pretty close to that EMA 20. Same thing, do we bounce? Do we break through? Do we chop sideways? And in particular, NVIDIA. All focus is on NVIDIA right now because they were the giant that has been moving the markets, and we're already below that EMA 20. And they're the one that is shaping the XLK, they're shaping the SMH. So we really do want to see the performance of NVIDIA. Right now, it's not looking so hot. So there is a little bit of support right here, not a whole bunch. That would be very weak support in this region right here. Then we've got this, okay, but that's below the MA50. That's close to MA90. So if you throw a volume profile in there, yeah, you can see there's this gap. There's a little bit right here where I drew that purple line, and then there's this giant gap all the way down here. So that's not great. That's not great. We'll see. It does kind of look like we would at least test this purple line right here. And like I said, that's a pretty weak support. And so we'll see. There might be a lot of profit taking coming up. And if that happens, the QQQ is coming down. Okay, so let's see what happened to our VIX. VIX is up to 13.37. Okay, that's not too bad. Not too bad. If we start testing this 14.5, 15, then I'm going to be a little bit more concerned. But right now, this morning's idea of a hedge on the QQQ looks pretty good. VIX, I wouldn't do it on the VIX quite yet. I would just wait until the 14.5 or maybe 15 level before I started putting a hedge on using the VIX. The QQQ is looking like almost for sure we'll hit that EMA 20. But like I said this morning, you wouldn't hedge just to the EMA 20 because that distance is too small, and that doesn't really represent a break of the trend. And your portfolio shouldn't break apart just because the QQQ pulled back to its EMA 20. It might break apart if you hit that MA 50, and then almost certainly it would break apart if you hit that MA 200, and for sure it would break apart if you broke that MA 200, because during this time you're constructing your portfolio based on a bullish QQQ, or we've been neutral based on the bullish QQQ, and then if we break the EMA 20, that QQQ is still bullish. If we hit the MA 50, it's still bullish, but that was a major move. So it might break your portfolio. But if you break that MA 50 or that MA 200, for certain, if you're just sitting there as bullish or slightly or neutral, then that big of a move would break your portfolio. So you'd want to hedge or rebalance before you got to that point. So right now, what we're saying is be careful. It's looking like we need to start to become cautious and prepare to defend ourselves. If you want to defend right away, you could. It's just going to cost you a little bit more money, but it's a little bit more cautious. It's a little bit safer. But if it doesn't pan out, then you spent a little extra money. So it's just a matter of the portfolio manager's preference. So me personally, I might, if I had a several $100 million portfolio, or even just a couple $1 million portfolio, what I do is I do baby hedge right now. And then when we hit the EMA 20, I put on a normal hedge that I would use for the gap down for a pullback. And then once we got that pullback, or if we got that pullback, I'd be putting on another hedge for a correction. Right? And then so I take profits on my hedge on the pullback, and then I would put on a new hedge for a correction, and then see if it bounces or pulls back from there, or goes down from there. It's too easy to use the word pullback in different contexts, but then when I squish them into a single sentence or a single paragraph, then it can get confusing. So correction, if we break down even further to a correction, not pull back to a correction. So let's take a look at what's coming. We have our consumer confidence tomorrow. Right, consumer confidence, that's coming after market, so we'll be able to see that reaction during the market hours. I would consider rebalancing my portfolio ahead of consumer confidence. We had really poor consumer sentiment that was way off of consensus. Let's see if these guys change their consensus. Okay, so at least now they're anticipating a lower number than before, and the consensus range is kind of wide, 97 to 102. All right, so I wouldn't be too surprised if we come in below 100. Would we come in at 97 or 95? That I'm not too sure about. I don't have a good feel for, but I would say 100 or below is pretty likely. Above 100 is unlikely. So you could do rebalance based on staying neutral or go slightly bearish. And if you're bearish, then you'd be short-term bearish on the SMH, on the basically NVIDIA, because NVIDIA looks like it just broke down and that had that very weak support right here. And the next one is the MA50, which is this gap right here, which is very similar or very close to these peaks over here. So I would probably be on the more slight bear, right? A slight bear. And I don't necessarily want to turn my portfolio slight bear though, so I would do a hedge. I don't know if you want to do a specific to NVIDIA hedge, you could. You could do a specific to SMH hedge, but that has support right there, right at the EMA 20. And then you've got the QQQ. So the QQQ would be my choice because it's far more liquid than the other two anyway, although NVIDIA is super liquid at the moment. So just a baby hedge. That is exactly what I was saying earlier. So basically, I went through all that analysis to come to the same conclusion, which is right now I would put on a baby hedge. And when we get to the EMA 20, then I would do a normal hedge to the MA 50. And then when we get to MA 50, I would do a normal hedge to the MA 200. So basically, it's confirming my viewpoint that I would do a baby hedge right now. I wouldn't necessarily rebalance my portfolios. I just have a little baby hedge in the QQQ. So that is going to be about, let's see what bonds did. And then that'll round us out. Bonds is just chopping sideways. They're not waking up to these probabilities yet. Let's see if that probability changed off that 10.3. Nope, exact same. So yeah, just chopping sideways. So be careful. Consider hedging your portfolio and maybe take profits. If you take profits, take off pairs. So stay neutral. And then we'll just see what tomorrow and the rest of the week brings. But so far, SPY down a tiny bit, just below the EMA 8. That's not really a breakdown in the S&P 500 at the very least quite yet. And what was I going to look at? Oh, the volume. Where's the volume? 42.7 million. So still very low volume inside of these markets. So we'll see if we get increased volume tomorrow. If we do, we could get directional. If we get increased volume into a breakdown, then that's going to be kind of telling. Then we'll be starting to shift our portfolios slightly bearish at that point. So that's it for today. Hope you guys have a wonderful rest of your day, and I'll see you tomorrow. Pre-market.